Hi guys, and welcome back to Simply Forex, the channel dedicated to you, the trader. We want you to be successful in the markets. So guys, I'm going to give you some gold every day. I'm going to let you know which currency pairs I'm looking to trade and which direction. And I'm also going to let you know which news that you must be aware of. So let's take a look at the chart and what I'm potentially going to trade today. Traders, hi, welcome back. How are you? Today is Wednesday, the 6th of July, and I am in agony, not because of what happened on the US dollar, Canadian dollar, but because I did squats last night. I must stop doing squats. Don't do them. So like I said, guys, yesterday on the US dollar, Canadian dollar was a crazy day. So first of all, we're going to look back at that. We're going to look at today's potential trades. And we're going to look at the news for today as well, guys. Okay, but let's look at yesterday first of all. It was a really interesting day, guys. It was technical trading versus macroeconomic trading or fundamental trading, yeah? And the fundamental macroeconomic news won the day. But let's look at all of this in more detail so we fully understand what happened and why. So, our idea was to short the US dollar, Canadian dollar. Okay, so price had come up, yeah, all the way up to here, tested this zone here. Okay, came back down, created a higher low. Yeah, we wanted to price pushed off of here. Okay, but it didn't carry on, it didn't follow through. Instead, it broke down, breaking this last low, and therefore creating a new lower low. And we also had lower highs. All right, so trend is in a downtrend. This is reasonable to take shorts from this situation. Okay, and we had this large candle here, if you remember, this large wick, yeah, which we were trying to take shorts from. Yeah, sellers had taken control of this large wick, although it's a green candle. Look at that wick. Yeah, and we were just trying to take short from this grey zone down to this blue line, even this blue line, or even this blue line. Yeah, this is the longer target. Okay, and as you can see, guys, that was all completely blown out of the water yesterday. Look at this candle. All right, so so the trade idea was wrong, but because, well, let's look at the H1 so we can see, guys. So as I always explain to you guys, yeah, you need criteria before you enter a trade. You need to know what you're doing for that day, before you do it. Okay, so you need to know which criteria has to be met before you take a trade. If you don't do this, you may as well just give your money away to charity. It'll be better spent. All right, guys. So, as you can see, guys, we only had the one grey zone. All right, and we wanted to see a bearish candlestick pattern form in this grey zone. Okay, that clearly didn't happen. Yeah, and then once price broke this grey zone, guys, remember I said I'm not interested. Yeah, H1 structure has broken. It had come back into this H4 diagonal zone as well, and I just wasn't interested if it broke this grey zone. Okay, and thank God we have criteria to keep us out of trouble. Yeah, imagine entering this short. You would be in a world of hurt. But because of our criteria wasn't met, we couldn't enter short and we couldn't feel this pain. And there would have been a lot of pain to feel. All right, so yeah, no problem. We didn't have a trade on this pair, and thank God we did. Yeah, because it went up literally all day. Okay, so remember that, guys, must have criteria to enter a trade. If you don't, or your criteria isn't met, don't trade. No setup, no trade. All right, guys, but what is the reason for this Canadian dollar shooting up like this? Yeah, so let me tell you, it's this. It is oil. Yeah, Remember, guys, every time I mention oil, I always mention how correlated it is with the Canadian dollar. Okay, so the correlation is this: if oil drops in price, the Canadian dollar will weaken as well. Okay, if oil increases in price, the Canadian dollar will gain strength. Okay, so they are positively correlated in that respect. Okay, so as you can see, guys, this is the day chart on oil, and look at the candle yesterday on the oil. Okay, reasons for this, guys, is simply we're sort of entering a recession. The global economy is cooling down. You can see that on the indices. Yeah, the stock markets are coming down as well. So simply demand for oil will cool as well. Okay, less demand, there'll be a fall in price. Okay, and this obviously impacted the US dollar, Canadian dollar yesterday. Yeah, give Canadian dollar weakness and therefore US dollar strength and push that pair up. All right, guys, so an interesting trade. Yeah, we stayed out of the US dollar, Canadian dollar. Let's go back to it quickly. So we stayed out of this, okay, because we didn't have our criteria met. The reasons for this were the drop in oil. Okay, this what led to this sharp uprising in this pair. Okay, so fundamental macroeconomic news was far more powerful than any technical chart yesterday. All right, guys, but an interesting trade. Okay, so no trade yesterday. Let's take a look at today's potential trades now, guys. Guys, if you enjoyed yesterday's recap and the correlation between the Canadian dollar and oil, then please subscribe to the channel and smash that notification button, guys, all right? That way you receive an alert every day. And also smash the like button, help support our channel. Thank you. Okay, guys, so today is Wednesday, the 6th of July, and we have got 4 potential trades. Yes, 4 potential trades. You heard it right, guys. So the first one is this. This is the euro against the New Zealand dollar. All right, guys. And as you can see, it was in an uptrend. There we had higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. Okay, but we haven't created a higher high. Okay. So again, this is normally a good indication that price is breaking down. And then at this last low here, guys, yeah, which also takes into account this wick and these lows here, we have had this very bullish red candle form that has broke these last lows here. All right, so trend has changed. Yeah, we are in a downward structure now. Okay, so the idea is off of this red candle, we want a little bit of a retrace into our grey zone, and then we're just going to take price back down to this blue line, which corresponds with this area of support here. Okay, guys, so yeah, we're shorting the euro New Zealand dollar, and that's the trade idea. Let's look at the H1 for execution. Okay, guys, so yeah, we just want price to retrace up into this grey zone, okay, up to here somewhere, which corresponds with this 700, yeah, psychological number, and these lows here, guys, all right? So we want to see price come up into this grey zone, offer us value for money, then we'll see a bearish candlestick pattern form. That's our trigger to enter. We'll enter the trade, take price back down to these lows, close 80% of the trade, and then leave 20% to run. All right, guys, so euro against the New Zealand dollar, short for today. Next trade is this. This is a pound against the New Zealand dollar, and we're also looking to short this. So this is obviously correlated with the euro New Zealand dollar. So trade the one that gives you the best setup, guys. And a similar story, yeah? We was in an uptrend. Higher highs, higher lows. We haven't created a higher high. Yeah, cross here. We did have a higher low, but it just came up and we still didn't get a higher high again. okay? And instead, these lows here, like the Euro-New Zealand dollar pair, have been broken with this very large bearish red candle that formed yesterday. Okay, so from this bearish, very bearish red candle, we just want a little bit of a retrace. And again, we're going to take price back down to this blue line, which corresponds with these lows here. Okay, guys, so yeah, shorting this pair. Let's look at H1 for execution. Yeah, quite a large grey zone, guys, but, you know, welcome to the pound to New Zealand dollar. Yeah, moves a lot of pips in a short space of time. So, yeah, we had to take into account a lot of lows here. So we've got this one, these ones, and this one, this one. Okay, so this is why the grey zone is quite large. But what we want to see, guys, is price come up into this grey zone. We want to see a bearish candlestick pattern form. That's our cue to enter, get in the trade, close 80% of the last H1 lows, leave 20% to run to our blue line. Okay, guys, that's the second trade idea, pound against New Zealand short. The third idea is this. This is the pound against the Aussie dollar. Okay, so we're looking to short this pair as well, guys. Okay, so again, correlated with the pound New Zealand dollar, guys. So yeah, sort of pick the one that gives you the best, you know, value for money, the best setup. But again, this was in an uptrend. Higher highs, higher lows, higher highs, higher lows. Didn't create a higher high. Yeah, instead reacted at this zone and come down quite aggressively. Okay, and then these last lows here were broken. Okay, these last lows here have been broken with this very large bearish red candle. Okay, so the idea is just to take price back down to this blue line. And I'm just aiming for a psychological level here, this 7,500, guys. Okay, so we're shorting this pair. Let's look at H1 for execution. So a couple of ideas that what could happen here, guys. Okay, so yeah, price could retrace up into this grey zone. Okay, if it does, great, we get good value for money. Yeah, then we see a bearish candlestick pattern form, take price back down to these lows. Close 80%, leave 20% to run. Okay, so yeah, that could possibly happen. Yeah, I don't have a crystal ball, but this is what I'm expecting the market to do. If that doesn't happen, guys, then we have another option. Okay, so price could come out of this grey zone, come back in. We want to see it react at this grey zone again. We want to see a bearish candlestick pattern form, and then we can take price lower. Okay, remember, guys, we like this pattern. What was once support breaks down, becomes resistance instead, and then we take price lower. I love this pattern. I'm in love with this pattern. Okay, so yeah, pound against the Aussie dollar. I've got a couple of ideas how to trade that one today, but we are shorting this pair. Okay, fourth trade idea. Yes, you heard it right. Fourth trade idea. When's the last time this happened? The fourth trade idea is this. This is the pound against the Canadian dollar. Okay, so we are looking to buy this pair. So price was in a downtrend. Yeah, lower lows, lower highs, lower lows. Price shot up. We got a higher high. Yeah, higher high. Then price has come all the way back down and tested this last low. Okay, you remember a couple of weeks ago, not a couple of weeks ago, it wasn't that long ago, a couple of days ago, we were trying to buy off of this wick here, guys, you remember? But now we've got this candle here, we've got a green candle. Again, it could be more bullish, a bit more of a doji than anything, but it pushed up off of this last low again. Okay, so that's why I like this trade. Okay, and we just want to take price from this zone up into this blue line or even this blue line here, guys. So we're looking to buy this pair. Okay, and also obviously you know, what happened with oil yesterday, guys. So that started plummeting. So that will give, you know, if it carries on in that direction, it will give the Canadian dollar less strength. It will become weaker. And therefore, with this pair, the pound will become stronger. Okay. So, yeah, we're looking to buy this pair. Let's look at H1 to see how we can enter this trade. So, guys, yeah, what I want to see basically is price to come back down into this zone and test all these, see all these wicks here, all these wicks. Yeah, test all of these lows. Okay. Then we want to see a bullish candlestick pattern form, get into the trade, take price back up to these last highs here, close 80%, and then leave 20% to run up to here. Okay, guys, so pound against the Canadian dollar. Long, we are buying this market. Okay, guys, so they're the 4 trade ideas for today. I hope you've enjoyed them. Let's take a look at the news now. Guys, if you're enjoying this daily morning analysis and want to receive it every single day, Monday to Friday, then please subscribe to the channel and smash that notification button. That way you receive an alert every single day. Okay, so news for Wednesday, the 6th of July, guys. We have got the following. So, nothing overnight, guys, as you can see. The first piece of news that we're interested in is this. At 9:30 London GMT, coming out of the UK, we've got construction PMI. PMI, important because of inflation. Okay, the next piece of news that we're looking at is this. At 3 o'clock, London GMT, coming out of the US, we've got non-manufacturing PMI. Again, important, inflation. Okay, after that, at the same time, we've got coming out of the US, we've got job openings. So again, another 3-star rating. So this could really move the US dollar pair, any US dollar pair. And then finally, guys, at 7 o'clock, we've got the Fed meeting minutes. Okay, so yeah, must be aware of these guys. This could really move the US dollar pairs as well. All right, guys. So yeah, that's the news for today. I hope you've enjoyed the vid. If you have, please subscribe, like, and share. I will really like that. Okay. Have a great trading day, and I'll see you tomorrow.